All right, good morning, everybody. So the reopening in China added with forward guidance on Home Depot seems to have woke up the bulls a little bit. We had a nice move through the kill zone, basically, in the overnight. The kill zone, if you haven't heard that phrase before, is this period of time in the Globex between 2 and 4 in the morning. Statistically and historically speaking, if you were to go back and look at the biggest moves that happen in a 22-hour trading period, most people think those biggest moves would be at the open. But in reality, some of the biggest moves have happened during that 2 to 4 a.m. time frame. Don't have to take my word for it. You can search for it. It's been called different things. I've heard it called the kill zone, so it's what I refer to it as. A lot of different reasons on the why. It's not my place to say the why, especially since there's been more than one answer for it. But that kill zone is often what we see a market make a move like that, and then it gives it all back afterwards. We have a lot of the Fed talking today, and you can see that there's also a lot of dark orange boxes highlighting anticipation within the announcement itself. The dollar is pulled back considerably from that 104 half area down to 103 half, and that also has kind of helped out a little bit. So like we usually do, want to check the markets from overseas, just check the news, make sure there's nothing really significant standing out. Most of the time there's not going to be, but we look anyways because we don't know. So nothing's really standing out. On the corporate events, Home Depot not only had a nice earnings, but they had a nice forward earnings, and that has helped with the little move we had this morning. We are continuing to see a lot of this move being given back, which is typical for the kill zone move. It's something to keep in mind. So moving on to Thinkorswim with the Market Watch. It's where we get a more detailed idea of what's going on. Today, it's the retail sales and industrial production. It's going to be a really big deal. And you can see that we have a full house. 8:30, 9:15, 10, 11, 11:30, 2 o'clock. And intermixed with all of this is different Fed speakers throughout the day today. Now, I don't have all their time frames scheduled out, but there's going to be a lot of talking going on by the Fed today. A lot of them are going to be pushing that same narrative. Yesterday, Bernanke is an older Fed. He's no longer the chair. And they all, it's the good old boy club. You don't talk smack on, the club. But yet he came out yesterday and was saying that the Fed really screwed this one up, and that this entire inflation event is nothing more than a mistake of the Fed, throwing eggs at him. So don't know how that's going to shake out yet. Just found it interesting. Bloomberg pointed that out. They've been having a little talk about it. There are additional auctions today at 11:30. Those are important. That means there is very likely not going to be a lunchtime window. From this perspective of a lunchtime window, it's where through the day we expect to see price pause around that 11 o'clock time frame. A lot of analysts push forward the idea that our day is divided into zones. that between 9:30 and 4, there are 3 time frames of trading, right? Just like time zones around the world. So if you have a time frame at 9:30 going until say 10:45 or 11 o'clock, and then you have another time frame on the back of that until around 12:30, 1 o'clock, and then you have the rest of the day, or at least in my case until around 3:15 or so, because once we start getting into power hour, I'm not really all that interested in participating in the market. Those 3 time zones. So typically during 11 and 1, the lunchtime window, we don't do or expect to do a whole lot of anything unless it's an additional auction day. If it's an additional auction day, we have the capacity or the potential to really make some moves. It's also a good time at the end of each one of those zones to kind of recheck all of the balances, what's going on in the market breadth. I got a lot of screens, so I watch all of that stuff all day long. But if you don't have a lot of real estate within your screen space and you're not watching those things constantly, it's a good time to recheck, rebalance, see what's going on out there, kind of ask the questions from the market that we want to continue to ask. Where are we? Are we still within our own Globex range? Are we still within yesterday's price range? Is there any expectation that we're going to leave the range? So many people get hung up on what our current pattern is. Are we in a flag, a bull flag, a rising wedge, without looking at the bigger picture and kind of asking the most basic and simple questions? Say, like yesterday. If you look at yesterday, we were inside of our own Globex for the most part. And when we left our own Globex, we were still within yesterday's price action. It wasn't hard to reimagine or try to figure out where we're at any moment given in time when we just look back and recognize, hey, we're still sitting in yesterday's price. We haven't gone anywhere. We haven't done anything. There's nothing on the table to even be concerned about. And if we're range bound in the S&P, then 9 out of 10 stocks are going to be range bound too. That there's no expectation of anything more than just setting your alerts on the edges and waiting for your opportunity. It took all day, but we finally did get our opportunity across the highs. It was worth the wait. Hopefully, you didn't sit there at the computer waiting on it. You just set an alert and went and did something else or traded something else, which is why I like options so much. You always have the opportunity to do something else while you're waiting on the futures. So for today, we are outside of Thursday and Friday's range. Consider that the box, right? Just put all of that in a little box. We are outside of the top of that. We are underneath the previous week's open. So we're still inside the week, right? If you think about going out onto a weekly chart, looking at last week's price, you can see the previous week's open is over our head, and then the previous week top. So those are 2 major pivot points that we really want to keep our eye on them, know where they are. Are we about to hit them? We did pass through the 4-period moving average. That is like a bull bear signal. When we're above I said 4, but I meant 10. When we're above the 10, we're bullish. When we're below it, we're bearish. You take that 10-period moving average on the daily chart, bring it into your intraday. You can see we made that cross last night. We want to see it stick, right? When you go out and you think about how price reacts when we are above it and what it begins to do when we fail to rally from it, right? There's plenty of examples in history. You go back and look and see what failure looks like if we get above it and we can't keep it, and then we dump back down again, right? And since we are in a negative marketplace, the expectation is that we're just coming up and tagging it or resetting, coming back to the middle. It's the same analogy we always use of the football field or the basketball court. coming back to the 10 is like coming back to the center court. And then from there, we make that expectation of what we want to do with it or what we think price is going to do. Sorry, I had a trade on one, needed to take a picture for my journal. All right. So our expectation at this point is that we can maintain our Globex. That'll keep us underneath the previous week open, which is the top of our Globex is 40.85 or 40.84 half. And the lower end of the minor box that I would focus on is yesterday's high. So that would be considered zone 1 or part of the range. We are inside day breakout, and that has its own connotations to deal with, but we're basically asking the question here, can we hold this breakout? So the reason the box is drawn the way it is, if we come back down inside of yesterday's price action, then we didn't keep the breakout. All of this is a part of the breakout, right? So all of this is Globex, but we want to define our box at the top of yesterday's highest value, and that entire area would be a zone. Then the next area would be the zone beyond that to the bottom of our Globex or to the start of Globex last night. That would be zone 2. And then all of yesterday's price action to its lowest values would be zone 3. And all of that would be a range. Okay? So a range bound day dealing with yesterday's lowest point to our current Globex high is the entirety of the range for today. If we move anywhere inside of all of this, we're just in a range day. So the expectation is if we are to continue this bullish momentum, we go to break out beyond our Globex high. Where are we going? We'll focus on breaking out of the previous week's price action. That would get us above 4,100. We have an ADR at 2.8 and we're up 1.5. So from our current location, we'll just add another 1.3. And that gets us to 4121, 4120-ish. So not a bad target to the upside, 4120. And a 4120 isn't the maximum we could go. It's just our average. If we moved today, what we have been moving on an average daily basis. On the other side of that, we have the capacity to break down. So from the close, if we were to make our ADR to the downside to be 2.85, and that gets us, we would still be above the previous week. I think that's just a mislabel. I'll check it in a second. We'd still be above Thursday's lowest value, and we'd be around the 3880-ish area. Let's check this mislabel. I tend to just copy lines, and then the label doesn't get rewritten correctly. Come here, you little devil. That cat is crazy. Crazy. All right, this is a mislabel. So Thursday was the previous week's lowest point. Now, again, when we draw our lines, we want to be able to back those lines up with something. We're not just randomly drawing lines at pivot points or previous price. At previous price points. We are above the point of control. We are above the anchor to VWAP. The size of the box is relatively narrow. We have volume by time and volume by price. Time is here in blue, and you can see that the blue volume by time and the green volume by price, their point of controls are lined up almost perfectly, and so are their value area low and highs. The value areas are based on a 70%, it's a one standard deviation. So 70% of all of the volume and 70% of all of the time was spent within this zone. We are above the worst of the volume resistance. And as we generally focus on when we're looking at this box, is we go from low to high, high to low, low to high, high to low. So we're moving towards the top of the value area. That's what we want to focus on. There's no volume resistance. We want to look over here and see the shallow area. And there's no resistance from the volume until we get past the value area high. From the same side of things, looking at things on a single day, each day having its own volume profile and each day having its own point of control. We want to carry those points of control forward until they get hit by price, and then we no longer need to. So like down here, 38.99 or basically 3,900. There's a point of control there. Then we have not come back down and revisited. All right, so until we do, we just keep carrying that point of control forward. I think this one here too. Get your head out of the way, cat. Yeah, so we haven't hit that one yet either. Right? There's an expectation when we get around 41.20 that we're going to come into contact with that point of control, first touch rejection at the least. All right, looking at the NASDAQ, we're basically sitting in the same situation. We're above yesterday's price action, so we have an inside day breakout. We're above the 10 period moving average. And we were momentarily above the Friday or Sunday night high as well. Our rejection actually came from Tuesday and Wednesday of last week. Major level of resistance, and we weren't able to make it through there. And again, when we draw lines like this, we're going to want to go over to the volume profile and see if there's anything over there that we need to focus on. Our expectation is with a 3.8% ADR that price could break through our current level, which is our current Globex high. And make a move to the upside equivalent to this ADR level. So with that in mind, from our current location, 1.9, basically just want to add about 0.9 more to this, or round up maybe to 2% or 1%. 12.617. If you get that close, you might as well call it 12.625 since the NASDAQ moves in quarters. That would be our expectation of a normal ADR move. So we're not saying we'd move beyond that, just we'd move at least that much. That line that we marked out, 12.55 basically, lines up with a value area high, but that there's no validity with that. We want to take it a step farther, look back and see if there's any point of control worth keeping a track of. And there is from a few Fridays ago. There's an untouched point of control at 12.8. Yeah, that's the only one. So a point of control at 12.8. That's a bit overhead considering where we're at so far. It's doable, but kind of unlikely. All right. So from that, look at the volume profile. We are within inside the profile. We're above the point of control. Nice shallow area. So we should continue to move through this zone relatively easy. The pivot point that we marked out from the previous peaks on Tuesday and Wednesday, there's nothing backing this up. When we look here, there's no point of control, there's no large volume shelf, there's nothing here that says that that should have been a resistance, and yet it's an area where we're finding resistance. The cyan line here is an anchored VWAP, and I mean we hit it, but that doesn't have any validity. So we can mark that spot at 12.547. But there's nothing here that we can point to. So you got to approach it with caution. It's easy to convince ourselves that that line has weight to it because it's been hit a couple times, but we don't have anything to point to for anything backing that up. There's no large amounts of volume there. So it wasn't a traded area, right? Like a big trader sitting up there defending that level. There's just nothing there. Sometimes price just stops at a spot and turns around and goes the other way. Doesn't mean there was any weight to it, right? Just Grimes talks about that in his books, that just because you can match two pivot points together or two peaks or two troughs doesn't necessarily on their own give them any validity or any weight. It doesn't mean you can't hold that expectation, though, if we come back into that spot, that there's very likely going to be a reaction at that spot. Because now today we have left volume resistance there today. We just couldn't find it looking back any further. As I mentioned, the dollar is continuing to sell off. You want to continue to use that dollar as your gauge of risk. Right? Just like we would look at the VIX as a gauge of risk. That's what we've been using the dollar for, and we want to continue to use the dollar for that right now. So seeing this sell off makes perfect sense. We've been way overextended. The dollar is what Bloomberg mentioned this morning, and it's 5 things you need to know. When you get down to the bottom and you read, what's Homeboy looking at? This is what he's focused on. It makes sense after the run that we've had in the dollar that it would pull back. Also makes sense with the move that we've been seeing today, the rally in the markets. Something's got to give. That's what's giving. So it makes sense. This is something you want to keep an eye on. Make sure it stabilizes, that the moves do not become extreme. Remember, we're worried in a market like we have right now, where things are moving extreme, that there's periods of time where things get broken, like what's going on in crypto. And when these situations happen and things get broken, things get extreme, bad stuff happens. Right. So just keep your eye on the dollar, make sure it doesn't get too nasty. We're going to be looking for it to kind of slow down and consolidate, build itself a base or a range. That's going to be the goal. If it continues to sell off while equities or the stocks continue to rise, then it's doing what it's supposed to do. But we don't want to see anything get broken, meaning we don't want to see like the ES and the NASDAQ fall while the dollar is still falling. That's going to tell us that there's something wrong out there. And make no mistake about it, things can get broken or things can get out of control. It wasn't very long ago that a new algorithm was put in line, and it created a flash crash. Right? I think it was over in Europe. So, things can go wrong. Keep your eye on the bonds. Doesn't really matter which one you pick. I tend to jump back and forth between the ZN and the ZB. We're really just looking for consolidation here, and we want to see the bonds try to heal a little bit after that aggressive move to the downside that we've been seeing. So if we look at bonds year to date, we were kind of holding a relatively reasonable range at around the 154 area, and we dumped down to around 135. So we need to see this stabilize a little bit. Look at it from a day-to-day basis. Are we within yesterday's price action? Are we leaving yesterday's price action? Where are we going? We want to continue to see it heal a little bit more. We just don't want to see exaggerated moves. If we start to see that, pay close attention to the reaction in XLF, KRE, any of the other ETFs that we use to monitor banks and finance. Right? They're going to directly impact, say, the S&P. So, like we're seeing in the futures, we had a nice rally in the overnight hours, but some of the big names that moved in the overnight is already giving it back. Tesla on a daily chart has this really nice double bottom. And the way IBD talks about double bottoms is that the right side should go lower than the left side. Now, that used to bother me because before I went to IBD and was reading about this, I always was under the impression that they were supposed to be equal, right? That the new low should be equal to the previous low. And when it wasn't, when it dipped lower than that, I would think, oh, it failed. The pattern didn't work. The way IBD describes it is you would want it to go lower than the previous low. That's actually a good thing. It's designed like a little bit of a trap, and the fuel in that trap are shorts that have to buy back. So you got the institutions buying, and then anybody who was caught in that short buying, and then you just get this really strong rip to the upside. So it makes sense from that point of view. This double bottom is the quintessential perfect double bottom. Now you have to put it into context and recognize we're not going back to the highs, right? Not anytime soon. So this is a double bottom that held. There is an expectation like a dead cat bounce. We rallied up. We're rolling over now, and that we're likely going to make our way down lower from there. Not just in Tesla, but across the board, right? We just happen to use that because that has a nice double bottom on it. We are momentarily back inside the Keltner. If we look at what's moving around in the sectors this morning, it's easiest to focus on what's not doing good, right? IYT, transportation is down this morning. And then the triple X. Bonds are basically flat. We have a few of the iShares, or mostly those are iShares, but a couple of sectors that are flat, zero, either slightly positive, slightly negative, and then we have all of these that are doing good. On the ones that are doing good, you're going to want to revisit those as we get closer to the open. We got economic news that's going to be coming out. We have the bonds that open up, which happened to have we just crossed into 8 o'clock, and one of my trades got closed. We made it to 75. Yay. So looking at what's up this morning, airlines, natural gas, Bitcoin, emerging markets. Now, I've said it, quite a few times. We look at emerging markets as a perspective of global risk, and we look at the dollar the same way, right? For different reasons, but we look at the dollar too. So when you see emerging markets up in the morning, it is a reflection or a representation of the appetite in the global space for risk. Are they buying in? Are they, you know, um, capital rotation out of, say, real estate and natural gas, and stapled goods? And if they are rotating out of that, then where are they going? Tech, finance, consumer discretionary, technology, marijuana are both up this morning, and finance is up this morning. Now, I say it quite a bit. If we're going to see a rally in the market, we have to have at least finance or tech. But when we have tech and finance, that's a really good thing, right? That's a combination of uh, broad market participation across all of the major sectors that really give the market its bullish bias. Healthcare is the second largest sector, but we don't look at healthcare as a bullish bias or a bullish trigger. Energy's up at this point, which is a good thing. Um, Another opportunity to trade. This has been a really great day trade sector, right? Finance and energy. They've got really liquid options. They're cheap companies, and by cheap I mean like under $50. Highly liquid, nice beta. These things move. So good to see that we've got another opportunity for energy. The devil's metal, silver, is up this morning, and we do have utilities, a little bit of the industrials, building materials. So we got some of that as well. So the S&P sectors leave a little bit to be desired for the modern world that we live in, right? So we want to kind of go in and break out our own sectors, things like the chips. Looking at the names inside the chip sector, you can see all of them are green, and even the least rallied ones are up at least 1.5% this morning, all the way up into some extremes of 4.7%. Really nice, um, really nice breakouts. That could be an amazing short today. I have to see how it goes. So plenty of opportunities, nice rejection points like we were focusing on in the NASDAQ. From chips, want to check out crypto. And remember, this crypto list is not just crypto names. They're names that are heavily vested in blockchain. And the names on this list came from the Smalls Exchange, crypto's future product, right? The futures are a representation of a basket of stocks. We want to know what's in the basket, so you can open up the Smalls Exchange crypto and see what's in that thing. And I took all the names out of it and built the crypto list from it. The EV market, and at some point, someday, maybe the S&P will have sectors like this, but until then, we just make up our own little aggregate ETFs. Some of the legacy names like Ford and GM are in there, up more than 1.5% this morning, looking really good. Again, Tesla is up uh, close to 3%, which when I was looking at it earlier today, I mean, it was up more than this, significantly more than this. Some of the extremes, XPEV, Liato, NIO, above 5%. Yeah, Richard, I see you asking questions. I don't get bogged down in answering a bunch of people's questions. I wait for after the briefing to do that in the large caps or in the chat room. So yes, I was referring to a 10 simple moving average. It wouldn't matter though, right? If you focus a little bit on moving averages, do a little bit of homework, you'll realize if you put both of them on there, the EMA and the SMA, look at how close together they are. Unless you're dealing with some penny stock junk where you get extremes of one side or the other, and then that EMA has to make bigger moves than the other. When people say moving averages, unless it's some convoluted, weird, oddball moving average, they're basically going to be the same kind of moving averages. Put a 10 on your chart. That works, right? Just put a 10 on the chart. Look at how price reacts to it. Dun, dun, dun. Just like that, right? It doesn't matter. Use the EMA, use the SMA, use whatever you're comfortable with. So for today, guys, when we're looking at the sectors, with all of the sectors aggressively making a move today, you don't need to use your own watch lists. You can just lean into the sectors. Now, you can use your own watch list. There's nothing wrong with that. We've already got the CBOE list from April. You can use that. You can also go in and get your week to week from the CBOE if you wanted to do it that way. When it comes to the sectors, like I've said before, I got these charts. They're already made. They're easy. They're ready to go. You look at the sector and you look at the names in that sector. So if energy is doing good, what names in energy are doing good? Which kind of energy is doing good? Green energy, production, transportation, shipping. What energy, right? Green energy or metals. We talking about metals. We talking about mining. When we say tech, what kind of tech? Healthcare tech, fintech. So by breaking it down into sectors, using the sector charts, coming in and talking about something, say, like the financials, if we do get this dump in the market today, the ones that are already gapped up the most are going to be the ones that we want to target. And it's not much of a surprise, right? It all comes back to like that dead cat bounce perspective that we've been down. What is it now? 8 weeks in a row, 9 weeks in a row. And that there's every expectation that the market is going to get a little bit of a rally. Not much of a surprise there, right? It's not like we're going back to the highs. We want to continue to sell the rip, not buy the dip. So on rally days like this, it's where you get ready for your new opportunity. You start thinking about what you want to sell next. Could we rip today? Well, you showed up kind of late. I'll say back up and watch the replay because we went through it. There is every expectation that we can rip, but it's all going to be data dependent. And we've got a lot of Fed speakers today. We've got a lot of econ on the books today, and any one of them could dump this market right back over. And remember, right now, all they've been doing constantly is trying to get this market to quit buying the dip. So instead of being the plunge protection team, they're going out of their way to push this market down, right? So can they push it down today? Well, I mean, they're all going to be out there talking today. So I would be cautious. I would be cautious that they manage to say something that dips us back down again. And beyond that, trade what we have, right? Trade what we have. So like the other day, beautiful opportunity to trade all the way up till lunch. In the grand scheme of things, we went back down later in the day, but we had an opportunity to trade bullish all morning long. Take it. There's your bullish opportunity. And then just be ready to dump it again on the other side. So what I got for you guys, be careful, be safe, have a good one. I will see you all tomorrow.